Okay, welcome to the last class on ledger account. I'm very proud of you all that was able to make it to this last class. I'm very glad to myself. So this is the last illustration and this illustration too. I know in our first class, or yes, concerning ledger accounts, I was explaining on debit and credit and also preparing ledger accounts. But in this class, we're going to deal with both cash and what credit transactions, unlike the last class that we just dealt with strictly credit, strictly cash. But in this class we're going to be dealing with both cash and credit transactions. So for the credit transactions, if for example you are giving a an entry to prepare goods that maybe were sold or bought on credit, in that state you're not going to prepare a purchases account. You're going to prepare a purchases day book. So when you are done, like, or you are finished with preparing that purchases day book, you're going to extract that value and also put it where in the purchases account. Do you understand? So just like for example in this June 2, Adam is 76,000, I'll do 27. This is what purchases, because it was what bought goods on credit. So because goods are bought on credit, you're going to prepare what purchases day book, not a purchases account for this. But by the time you are done with the purchases day book, we're going to extract the purchases account and what put it there. So I'm going to actually be explaining that. So but for now, let's just start preparing the accounts. So the first one, June 1, started businesses with 200,000 naira in the bank. So before we do so, let's just start preparing it. So the first one that we were told to extract is what? So for example, or before I actually move forward, we actually to not only prepare a ledger account but also to extract a trial balance. So like the first one, or the first class we did concerning ledger, we just prepared the ledger account. But in this particular video and also in this particular class, we are going to be extracting the trial balance also. So number one was June 1st, started business with 200,000 naira in the bank. So I told us that whenever you hear started business, you mean what's capital and in the bank. So now we are going to prepare bank account and what capital account, and we know that capital account has a what credit balance, so that means bank will be what debited. So now the first thing we're going to create is what capital account, right? So let's just write the name of the person. So we didn't have a name here, so we can just write ledger. This is supposed to be ledger. So I'm just going to write what ledger entries. So the first one is what capital account, right? So write what here will be what here will be capital put our credit here, we'll put our debit, our naira sign and our naira sign. So the next one is going to be what bank account, right? So bank accounts, credit, debit, naira sign, naira sign. So now what did they say concerning capital bank? They said what started business with 200,000 naira in the bank. So we're going to credit our capital account and we'll debit our bank account. So our capital account is here, so it's what June 1, right? So write June 1. So after June 1, we're going to write what as our particulars. We're going to write our what bank. So our amount is what 200,000 naira. 200,000. So this is credit. That means we're going to what debit our bank. So we're going to write what June 1. We're going to write what as our particulars capital, and the amount is how much 200,000. So we are done for June 1. So the next one is what? June 2. Bought goods on credit from the following persons. So I told us that whenever goods are being bought on credit, we're not going to prepare what? Purchases account. No, we're going to prepare what? A purchases day book. So now for the purchases day book, we're going to have our purchases day book will be like this. And also another thing you should notice is that anytime, for example, an entry is given to us to what to prepare, we should try and state or look if another book or another entry corresponds with this June 2, like another goods bought on credit. We can see that there's another goods bought on credit here. Let's see if there's another one. This one is sales. This one is sales. Okay. Bought motor van, cash check. So that means it's just like June 2 and what? And June 10. So because we know it's just 2, we can actually have our purchases here. Purchases day book can be here. So let me tell you how purchases day book is. You're just going to have your particulars, then amount. That's all. Your date, particulars, and amount. So we'll have our purchase. We are going to name it what? Purchase day book. So we'll have our what? Date, then what? Particulars, then what? Amount. So I'm going to rule like this. Our amount to do this. Don't forget your Naira sign. Then our particulars. Then our what? Dates. So these are our purchases day book. And what dates to concern? He said June 2nd, bought goods on credit from the following persons: Adamu, Audu, and Bello. Bought goods on credit from the following persons. So now the following accounts are going to prepare is what? Adamu account, Audu account, and Tibello. So since we are buying goods from them, who is giving us the goods? Adamu is giving us the goods, right? So now because Adamu, Audu, and Bello, they are giving, that means the purchases day book will be what? Debited. But in this state, because we're not going to have a debit and credit, we're just going to put it on amount. But when we are done, we'll transfer it to the debit side of what? The purchases account. Do you understand? So now we're going to also prepare whose account? Adamu's account, Audu's account, and not Tibello's account. So let's just quickly do that. Adamu's account, credit, debit, Naira. And the account, credit, debit, Naira sign. And the last one is who? Tibello, right? Yes. Tibello account, credit, debit, Naira sign, and Naira sign. So now we're reading our dates. Now is what? June 2, right? So we can just write 2nd what? June, and we'll write their names. That's Adamu, Audu, and Tibello. So Adamu is how much? Adamu is 76,000. So we have 76,000. Audu is what? 27,000, and Tibello is 28,000. So this 2nd June. So now we have done this. So now we are going to, because I told you, or the transaction here was what? Bought goods on credit from the following persons. So it's Adamu that is giving us the goods, Audu is giving us the goods, Tibello is giving us. Or if you just want to not be confused in that manner, you can just say anything bought is what? it's debited. So because bought is being debited, so the other people's account is going to be credited. For example, if they said sales goods, sales is what's credited, that means the other people's name will be debited, right? But this one is what bought goods. So bought account, which is purchases, will be what debited, and the other people's account will be credited. So now Adamu's account, we're going to credit it what? June 2. We can just write purchases, and how much is it? 76,000. This one is same, June 2 purchases, how much is it? 27,000. This one, June 2 purchases, and what's 28,000. So we have done for Adamu, Audu, and Bello, and we have also prepared the purchases daybook, in which this will be transferred to where? To the purchases account. So the next one is what? Cash sales of 47,000, right? June 5 is what? Cash sales. Do we have our cash account? No. Do we have sales account? No. So we have to prepare both sales account and cash account. So this will be our cash account. Right, cash account, credit, debit, naira sign. Then our sales will be here. Can use this as our sales account, credit, debit, naira sign. So now our cash account is to be debited. Why? Right? Why? Because our sales is to be credited. I told us that whenever any account like this is given, we should leave our cash first and we should deal with our sales. And we know that our sales is to be what's credited. So because sales is to be credited, we're going to credit it with 47,000 naira on June 5. So where is credit? Here. So write what? June 5. So we're going to, what is going to be our particulars? Cash. And how much is it? 47,000. The same here, we're going to debit here. So we're going to write June 5. We're going to write what? Sales, the particulars. And how much is it? 47,000 naira. So we are done with June 5. The next one is what? June 6, paid wages cash. Do we have wages account? No. Do we have cash account? Yes. So because wages account is being paid, wages account is going to be what? Debited, because it's what? An expense. So because wages account is debited, we are going to what? Credit our cash. So we can already just credit our cash with 11,000 because you have the account here, right? So we will just credit it June 6. We write wages as the particulars, and how much is it? 11,000. So now we have done that, so we have to prepare another account. You have to prepare another account for wages account. So now, okay, so prepare our what? Wages account. So here is what's credited, here is what debited, naira sign. So we're going to debit our wages account. Why? Because we have already credited our what? Cash account. So June 6, and the amount is what? 11,000 naira. So our cash is going to be here. So we're going to write June 6. Here will be what? Cash, and our amount is what? 11,000 naira. Do you understand? So we have done June 6. So the next one is what? June 7, sold goods on credit to K Mahmood and what? El Abba. So we don't have this account, so we have to prepare this account. That's K Mahmood and El Abba. So because we are selling goods to what? K Mahmood and El Abba, who is receiving? K Mahmood is receiving the goods because we are selling the goods to them. So we are giving the goods to them, and because we are giving the goods to them, we are going to credit our sales account. But because it's on credit, before we actually move it to the sales account, you have to prepare the word sales day book. So sales day book is just like purchases day book. It has the date, It has the particulars and it has the amount. So I'm going to do that now, and also we are going to prepare the K Mahmood and El Abbas account. So you can prepare the K Mahmood account here. K Mahmood's account and El Abbas account. So you can write K Mahmood account and El Abbas account. So here is credited, here is what debited, here is our Naira sign, here is our Naira sign, here is credited, here is what debited, here is our Naira sign, and here is our Naira sign. So we're going to debit the account because why? We're going to be crediting sales what daybook, and because we don't have our sales daybook, we have to prepare a sales daybook account. So we'll write our what? We'll write our what? Sales day book. So now we have to have our what? Our date, then what? Our particulars, then what? Our amount. So now, like I said earlier, during purchases daybook, during the preparation of purchases daybook, the thing we have to do now is to what? Actually find out how many credit sales it is we have, so we can know how long our sales daybook is going to be. So we have one credit sales here. Let's see if we have under credit sales. We have under 13th June. Let's see if we have another one here. What fund fixtures on credits? Okay, from Belta. Okay, so do we have any other credit? No, we do not have. So because we do not have any other credit here, so just like 4 particulars we have, so it's not going to be that much. This can be okay. So particulars to this can be okay. So now our date is what? What's our date for? Our date is 7th June. Sold good on credit to K Mahmood and El Abbas. So because we are selling goods on credit to K Mahmood and El Abbas, they are receiving our goods, right? Yes. So because that's true, we're going to be what? Debiting K Mahmood and El Abbas of 25,000 and 42,000 naira respectively. So we're going to write, it's going to be what? June 7th. So what are we going to write here? Sales. And how much is it? It's how much? 25,000 naira. June 7. We have what? Sales. So the last one is what? 42,000 naira. 42,000. So by the time I write June 7 here, I write June 7 to here, we have our sales. Sorry, K Mahmood and what? El Abbas. So K Mahmood is how much? 25,000 naira, and El Abbas is how much? 42,000 naira. So now we have done that. So the next one is what? June 9th, bought goods for cash, 64,000 naira. So that means the 2 accounts we need is what? Purchases account and what? Cash account of how much? 64,000 naira. And when was the date? 9th June. So do we have purchases account? Do we have purchases account? We have sales account, but we don't have purchases account. So we have to prepare our purchases account. But do we have cash account? Yes, we do. So let's prepare a purchase account. So we can write here as our purchases account. So we have our what credit here, we have our debit here, our naira sign is here, and our naira sign is here. So it said the June 9 was what was bought goods for cash 64,000 naira. So that means purchases is going to be what debited. So we have June 9, and our particulars will be what cash. How much is it? 64,000 naira, right? So that's for June 9. So we are going to be putting it on the credit side of where our cash account. So our cash account, right? June 9. So we write what purchase. How much is it? 64,000 naira. So we have done the purchases, and we have prepared the purchases and cash account. So next one is what June 10, bought goods on credit from A Kano and T Alba. Do we have A Kano and T Alba's account? No. But do we have our purchases daybook? Yes. So we have to prepare A Kano's account and also T Alba's account. So we'll prepare A Kano's account, A Kano's account, A Kano's account. That's here will be credited, here will be debited. Our naira sign, our naira sign. So we have to prepare A Kano's account and what T Abla's account. So T Abla's account. So here will be what's credited, here will be what debited. Our naira sign, our naira sign. So now, because we already have our purchases daybook, that means our purchases daybook will be what normally our purchases is debited, right? So because here in June 10 goods were bought on credit from them, that means A Kano and T Abla, the one that is what giving us the goods, and because they are giving us the goods, they are going to be what credited. So we'll write what June 10 here. So here is going to be what purchases. June 10 here. Here is going to be what purchases. So how much is it for A Kano? That's 47,000, and for T Abla is what 89,000. So we have done this. So we have to move it to where our purchases daybook. So this is 2nd June. The next one is what 10th June. So it's what A Kano and T Abla, right? So we have A Kano and what T Abla. So A Kano is how much? A Kano is what 47,000, and T Abla is what 89,000 naira. So now we have done this. So the next thing for us to do is what June 12, and it's paid wages in cash. Do we have our wages account? Yes, we do. Do we have cash account? Yes, we do. So we already have our wages account here, and it's what June 12th, right? June 12th. So because we already have our wages account, right? June 12, and how much is here? Say paid wages in cash. So here will be cash, and here will be what 14,000 naira. Do we understand? So we have done that. So the next one is what, but we have to record it in cash. So because here is debited, our cash should be what credited. So we have what June 12, we have what wages, and we have 14,000 naira. So we have done this. So the next one is what June 13, sold goods on credit, Tabara and Laba. Do we have Tabara and Laba's account? No, we do not. So Tabara and Laba, this one sold goods on credit. I think yes, we do have Abba's account, T Abba, because L Abba's account, we have L Abba's account. So because we have this, we don't have to prepare L Abba's account again. CT, where it's going to be See El Abbas account already here, so we already have his account or her account. But because we already have that, so we have to just prepare Tabara's account. But let's just still be sure to see if we have any Tabara's account. Tabara, okay. So now we're going to prepare this account. So first, because we already have this and the sales on credit, we need to prepare a sales day book. And because we have our sales day book, we don't need to prepare that again. We just have to record this and prepare this. So we have to record this since we already have our sales day books. Where's our sales day book? Our sales day book is here, so we can write June. That's June 13. So we have sold goods on credit, Tabara 32,000 naira. So we have Tabara 32,000 naira, and the next one is what on June 13 is what El Abba 32,000 naira also. So we write 32,000 naira, June 13 El Abba. So now we have, like I said, we already have Tabara's account, right? Or El Abba's account. Which one do we have? We have El Abba's account. So because we have this, we can just write what? June 13 here and write what? Okay, we can write sales. Then what are we now going to write? 32,000 naira, which we have done. So now after that, we have to prepare what? Tabara's account. So in preparing Tabara's account, we're going to what? Debit Tabara's account, not credit. So we're going to write Tabara's account, credit, debit. So we have what? It's what? June 13, and we're going to write sales, then 32,000 naira sign. So we are done with our what? June 13. So the next thing we are going to move to is what? Our June 15. Bought fixtures on credit from Belta Limited, 60,000 naira. So that means Belta Limited now is what? Is giving furnitures to us. Do you understand? So now because goods are being bought on credit, we are going to prepare what? A purchases day book. But because, for example, now it's not deals, it's not bought goods, it's bought furnitures. We're just going to prepare a furnitures account straight. Do you understand? We don't need to start preparing a purchases day book. So because goods were just bought on credit, so we're going to have two accounts here. We're going to have what? Furniture's account and what? Belta's account. Do you understand? So we're going to have Belta's account first. Let's write Belta. Belta's accounts, and we're also going to have what? Furniture's account. Furniture's account. Credited, debited, credited, naira sign, and naira sign. Let me explain this again. For example, whenever they are dealing with goods, you have to prepare a purchases day book. But if you are dealing with maybe furnitures, or they give a name to that particular good, you don't need to prepare a day book account. You just prepare the furnitures account straight, and you are going to debit it because it was bought, and you are going to credit Belta's account. So why are we crediting Belta's account? Because furnitures were bought from Belta. So Belta is giving us the furnitures. So we're going to credit her account. So June 15, we'll write furnitures here. Then what are we going to write? 60,000. So now here is we're going to debit it. So we're going to write June 15. We're going to write here? Belter. So how much is here? 60,000. So June 17 now, pay Akano by check. Paid Akano by check. So because you are giving Akano money by check, you should not be confused by saying that okay, it's because you are paying by check is different from paying by cash. It's the same thing, but check means what here? Bank. So you are paying Akano. That means Akano is receiving the money. So because Akano is receiving the money and you are going to, is by check you are paying her. So you are going to debit Akano's account and you are going to what? Credit bank's account, because it's through check you are giving. So because one thing for you to actually know here is what? The Akano's account. I told us that we should actually consider the other person's account first before what? Check. So because we are paying Akano's account, we are going to what? Debit Akano because she's receiving the money. And I'm going to credit check. So the first thing for us to know is to actually find out if we have any Akano's account. So yes, we have Akano's account. So we are paying her by check. So that means we are going to debit her account of what? 47,000 naira. So that means this 47,000 naira that she already gave, she's actually going to be debited. She also received the money too. So I'm going to write was June 17, right? So we're going to write what's bank. Then how much is it? 47,000. So do we have bank accounts? Yes, we do have bank accounts. So because here is debited, right? So we're going to what? Credit our bank accounts. So we're going to write June 17. Here we're going to write to Akano. And how much? 47,000 naira. So we have done this. We have done this. So the next one is June 18. Paid Belter Limited his account by check. It's still the same thing. So paid Belter Limited his account by check. So Belter is to be what? Is to be debited because you are paying what? Him by check. So now let's look for Belter's account. That's what? Belter Limited, right? So Belter, let's look. Do we have Belter? Yes, we have an account. And anytime we see what? Paid Belter Limited is account by check, it means that everything that he's supposed to be giving us, right, it has been paid for. So that means we are going to debit it with what? 60,000 naira because its account was paid by check. So it's going to be debited with what? 60,000 naira. So we're going to, what's the date here? The date is what? June 18th, right? So we're going to write June 18th. We're going to write what? Check, which is what? Bank. And how much is it? 60,000. Do you understand? So in bank account, because here is debit, we are going to what? Credit our bank account. So bank account here. So we have June 18. We're going to write what? Belter, right? Belter. So how much is it? 60,000 naira. So we have done this. So the next one is June 24. Is what? Receive check from El Abba. So El Abba now is giving us check. So that means El Abba's account will be what? Credited, while bank account will be what? Debited. So why? Because we're receiving our check. Let's use this instance. Both of us are in a business. So you are receiving a check from me. So what am I doing? I'm giving a check, right, to you. And you are receiving that check. So El Abba, which is me that is giving, will be well credited. So let's see if we have any El Abba's account. El Abba, let's see if we have any El Abba. We have El Abba's account. So now El Abba is giving how much? 74,000 naira. So because she's giving 74,000 naira, right, we're going to what? Here will be what? June, how much is, sorry, June 24, sorry, June 24. So here will be what? Because it's true check, so we're going to write bank here, and what's going to be here? 74,000. So in our bank account, we're going to what? Debit it with what? 74,000 naira. So we're going to write June 24. We're going to write, what's the name of the account? El Abba. 74,000 naira. So we have done this. So now John lent the business 60,000 by cash. John lent the business 60,000 by cash. So John is giving the business 60,000 by cash. So because John is giving, right, because he's giving, he's going to be what's credited, and because he's true cash is going to be, the cash is going to be what debited. So John lent the business 60,000 by cash. So June 28th is what John lent the business 60,000 by cash. So whenever someone lends the business, that means you are going to call it what? Loan. You're not going to open a John account. It's going to be what? A loans account. So because this is loan, this is going to be credited. Why? Because it's a liability. But without that safe, John is giving, so that means it is loan because you are giving and you are to be credited. So you are going to have a loan account and a what? Cash account. So I'm going to prepare a loan account because we already have our cash account stated. So credit, debit, naira sign, naira sign. So the date is what? June 28th, right? June 28th, and it's 60,000 naira. So we're going to write what? June 28th. We're going to write what here? Cash and 60,000. So we're going to debit our cash, right? See our cash. We're going to write that June 28th. We're going to write it with what? Loan and what? 60,000 naira. So we have done this. So the next one is what? Bought a motor van paying by check. So motor van, are going to what? Debit it. Why? Because it's an asset. But without that even saying, anytime we see bought is what? Bought is purchases, and purchases to be what? Debited. So you're going to debit motor van and you're going to credit bank account. So we already have our bank account. So we're going to look prepare a motor van's account. So motor van, credited, debited, naira sign, right? So because motor van account is here, so we're going to debit it with what? 100. Okay, let's see how much. With 80,000 naira. So the date is what? June 30. This is the A part. So this is what? By what? Check. So write bank 80,000. So now our bank account will be what? Credited. So let's see our bank account. Our bank account is here, so it's going to be credited. So we have what? It's going to be what? June 30. So we're going to write what here? Motor van, then what? 80,000 naira. So the last one now is what? Further capital paid in by check. Further capital paid in by check. So by check, so capital account will be what? Debited, and bank's account will be what? Credited, because the further capital was paid in by check. So we'll open our capital account. Where's our capital account now? We'll credit our capital account and we'll debit our bank account. So let's credit our capital account. June what? June 30 B. Then this is bank, so that means it's going to be what? Bank. Let's see how much what it said. Further capital paid by check. So because it's paid by check, it's also bank here of 100,000. So our bank account here is credited, so here will be debited. So we have what? June 30 B. Then we have our what? Capital of how much? 100,000. So now we are done. We're actually done preparing the accounts for every ledger account stated here. So now we're going to be what? Balancing the account and then extracting a trial balance. But before we actually balance the account, we have to move, like I told us, everything sales, we have to move it where? To the sales account, and everything in this purchases day book, we have to move it where? To the purchases account. So now the sales, now we can either just calculate it once and put it here, or you put it, as you have put June 7, you put it here. But I'm actually going to tell you or show you another method. But in the meantime, you can just calculate it. 25 plus 42 plus 32 plus 32. That's how much? 131. 25, 42, 32, 32. So now sales, you can just write credit sales. How much do we have here? 131,000. For our purchases, now we'll do the same thing. Our purchases, we write 76 plus 27 plus 28 plus 47 plus 89. 267. 76 plus 27 plus 28 plus 47 plus 89. 267. So we can just write credit sales here. How much do we get? 267. 267,000. So now we have done this. So now we can now balance our accounts. So we start from the beginning. So the first one now is what? Capital accounts. So the capital accounts now, 200 plus 200 is what? This is what? 300,000. Because of space now, you already showed us in our first class about balance carried down and our balance brought down. So if we put our balance carried down here, it will be what? 300,000. Our balance brought down will be here, which is what? 300,000 on the credit side here. So bank now, I told us anything bank and cash, this side has to be always more than what the credit side. So now let's calculate our debit side. Our debit side is 200 plus 74 plus 100 is equals to 374. That means here and here is to be what? 374,000. 374,000. So we minus it by, that's minus 47 minus 60 minus 80. So this 187 is what our balance carried down. Balance carried down 187,000. Balance brought down 18,000. So now our balance brought down is 187. So now for purchase, we don't need to calculate this because we have already moved everything to our purchases account. So for Adamu's account, 76,000 here. So we'll just put balance carried down 76,000. Balance brought down 76,000. The same thing for NALDO. Here is credited. So here we'll do balance carried down. How much? 27,000. Balance brought down 27,000. So the same thing for here. Our balance carried down will be what? 28,000. Balance brought down will be what? 28,000. So for cash, this side has to be always more than what? This side. So now we have to do that. 60,000 plus 47,000 is what? 107,000. So $107,000. That's 107,000. That's minus 11 minus 64 minus 14. That's 18,000. So our balance carried down is what? 18,000, and our balance brought down will be what? 18,000. For sales here, that's 131 plus 47 is 1178. So our total sales here is what? 178,000. Our balance carried down is 178,000. Our balance brought down is 178,000. So we have done for sales. Next one here is what? Wages. Our total wages here is what? 11 plus 14. 11 plus 14 is what? 25. So here we have gotten our total as 25,000. Because of space, this is already our balance brought down, because here will be balance carried down. Do we understand? 25,000. So here sales, K Mahmood's account 25,000. So because of space, also our balance brought down is also 25,000. So now El Abbas account, right? So we are going to, if you add, here is what 74,000, here is what 3 plus 4 is what 7, 2 plus 2 4. So here is already 74. Here is already 74. So we don't need to move this, because the credit side and the debit side has a 74 balance. So we don't need to move it to the trial balance, right? So this one too, we don't need to move the sales day book, because we have already transferred it to the sales account. So for the purchases account now, 64 plus 267 is what? 331. So this one 331,000. So because this is 331,000, this is already our balance carried down, balance brought down, because our balance carried down will be what? 331,000. Our balance brought down will be what? 331,000. So now K Kano's account, this also is equal, so you don't need to move it to the trial balance. So for T Abba, because of space, this is already our balance brought down. For Tabara's accounts, because of space, this is already our balance brought down. For Belta's accounts, here is equal, here is equal, so we don't need to move it where to the trial balance. Furniture's accounts, because of space, because this is already our balance brought down. I'm not saying you should not do this in the exam that you've seen because of space. You will have enough space. For loan, this is already our balance brought down. Motor van, this is already our balance brought down. So now in this next class now, or in the next video, we are going to actually be preparing our trial balance, extracting our trial balance. The way you are scared, me too, I'm scared, my heart is beating. God, please let this thing balance. And it's to balance, so by God's grace. So that's what we are going to be doing in the next video. You are going to see now, we're going to be preparing our trial balance. So like I was saying, before we actually start putting the debit and the credit, let's just highlight the ones that we know that are going to the account, so that I will not be confused. So for the first paper, we know that okay, this one is going to the account. That's what? Credit side. Bank debit side, this is the one that is going. What else is going? But this one is not going. Adamu's account, this is going. Anywhere that has balance brought down, that's where it's going. N Audo's accounts, does here, yes, balance brought down, it's going. T Bello's account, balance brought down, it's going. Cash account, balance brought down, it's going. Sales account, balance brought down, is going. Wages accounts, balance brought down, is going. Mahmoud's account, balance brought down, is going. El Abbas account, there's no balance brought down, because here was credited with 74,000, here was 42 plus 32 is what? 74, so it's not going. This one no going. Purchases, balance brought down, it's going. Kano's account, there's no balance brought down. T Abbas account, balance brought down, is going. Taraba's account, balance brought down, is going. Belta's account, no balance brought down. Furniture and balance brought down, is going. Loan, balance brought down, is going. Motor van, balance brought down, is going. So we have already prepared. So I think the only ones that are not going is Belta's account, Kano's account, and what? El Abbas account. So let us just prepare our trial balance. Moment of truth. Hey God, help us. So the first one is what? Capital, right? Capital. So we're going to write capital. And I told us where our debit and credit is the place where we have our balance brought down, or where we are going to put it in our trial balance is where we have our balance brought down. So our balance brought down is 300,000. Where on the credit side, right? So we're going to put it on the credit side, 300,000. Okay, bank is what on the debit side. Our balance brought down is on the debit side. So it's in 187,000. So we have bank 187,000. The next one is what? Adamu's account. Adamu's account, does he have balance brought down? Yes, and it's well on the credit side, 76,000. So Adamu account is how much? 76,000 on the credit side. So we have 76,000 naira. And Aldo, does he have balance brought down? Yes, and it's well on the credit side. So we'll put our balance brought down on the credit side. And Aldo, how much is it? It's 27,000 CR plus 27,000. The next one is what? After N, I'll do is what? T-Bello. T-Bello, does he have a balance brought down? Yes, 28,000 on the credit side. So write T-Bello on the credit side, 28,000 naira. So after T-Bello is what? We have cash. Cash is how much? The balance brought down is what? 18,000 on the what? Debit side. So write what? Cash on the debit side, we have 18,000 naira. So what again? Sales is where on the credit side, how much? 178,000 naira. So we have sales 178,000 naira on the credit side. So we are done for this. So I'm moving to this. So wages is on which side? Balance brought down is where on the debit side, 25,000. So we have wages on the debit side, 25,000. After wages is what? K Mahmood's account. K Mahmood's account, you have a balance brought down where on the debit side. So write K Mahmood account, and it's how much? 25,000. The next one after K Mahmood is what? El Abbas account. El Abbas account, is there a balance brought down? No, because this and this are balancing. Do we understand? So the next one is what? Purchases, because this sales day book, we have already transferred it to the word sales account. Purchases, our balance brought down is where on the debit side. So it's what? 300. Purchases, 331,000 naira. So I've done for purchases. So the next one is what? A Kano's account. A Kano's account, does it have a balance brought down? No. T Alba's account, does it have a balance brought down? Yes, it's on the credit side. So we write T Alba's account, and it's on the what? It's on the credit side of what? 89,000. So this is the credit side, right? 89,000. Sorry, this is 0. After T Alba's account is what? T Baraba's account. Tabara's account, and it's where on the debit side, the balance brought down is on the debit side. So we have Tabara's account, and it's where, what's the amount? 32,000 naira, and it's where on the debit side, right? 32,000 naira. So Belta's account, does it have a balance brought down? No. Furniture's account, does it have a balance brought down? Yes, and it's where on the debit side, which is what? 60,000 naira. So furniture, I've done with furniture. The next one after furniture is what? Loan. Loan, does it have a balance brought down? Yes, and it's where on the credit side. So write loan on the credit side, 60,000 naira. Motor van, does it have a balance brought down? Yes, and it's where on the debit side. So we have motor van. How much is the amount? 80,000 naira. So now, like we stated, like in our account, I told you that there are all these items, there are items that must always be in the debit or credit side of a what trial balance. Like for example, when we're treating trial balance, I gave you a lot of examples. For example, I gave you capital, I gave you cash, I gave us sales, I gave us purchases, and you can see, if you can actually watch our last video, you can actually see that sales is credit, must have a credit balance, purchases is what debit, and all that. So now, hey, we're going to be calculating the debit side and making sure corresponds with the credit side. So now the first one in debit side is 187. We don't need to add the 3 zeros because that's just stress. Plus 18 plus 25 plus 25 plus 331 plus 32 plus 60 plus 80 equals to what? 758. So we can just put 758 here. But before we do that, let's just check. 187 correct, 18 correct, 25 correct, 25 correct, 331 correct, 32 correct, 60 correct, 80 correct. So now we do the same for the credit side, right? 300 plus 76 plus 27 plus 28 plus 178 plus 89 plus 60 equals to what? 758. 758. So I'm so excited that the debit side actually equalizes with the credit side. So now I've already gotten this, so we just have to rule our line and actually, okay, let me check actually if it's what's correct. So we have 300 correct, 76 correct, 27 correct, 28 correct, 157 correct, 89 correct, 60 correct. So what we'll be doing now is to what? Do this. $758,000. So that's all for our video today. I'm very glad that we were able to make and finish, start well and also finish well. It's actually made me very glad. I really appreciate your time spent, and I really also believe that we have actually learned a lot, starting from our trial balance, starting from our double entry system to trial balance, to elements of financial statement, and to the ledger accounts. So now, wherever you are, whatever journey you want to start, I just wish you the very best, because I know that God is about to do something wonderful in your life, and I just feel that everything you must just actually have to start from wherever you are. Do you understand? Like the Bible says that some people, the reason they don't really understand, or so the reason they are still they can't eat meat is because they are still feeding with milk. That milk is for babies. So this milk I'm giving you all is for beginners, because I feel that you still really need to know a lot. Then we'll now move from milk stage to what? To mid stage. So I really appreciate your time and everything, and I love you all so much.